Imagine a two-paragraph letter filed on EDGAR that crashes a stock, hijacks the proxy season, and forces a $20 million market cap swing, all within 24 hours. It sounds extreme, but that's the new reality after the SEC's January 2025 PX14A6G guidance. In this narration, you will learn the exact 24-hour investor relations playbook to neutralize or deploy these short, viral investor memos, including a 3-minute triage script, a verification checklist, and 10 ready-to-use memo templates you can publish or file within a day. Stay with me, the best defensive templates come at the end. Since the 27th of January 2025, SEC staff updates to the compliance and disclosure interpretations around Rule 14A6G created a new channel, Voluntary PX14A6G filings. These are short, indexed investor letters or notices of exempt solicitation that sit on EDGAR and get amplified across social media, sell-side desks, and algorithmic scrapers. This information is educational only and not legal advice. If you have questions about compliance, speak to counsel or your compliance officer. What you will get is a rapid response workflow for IR teams. The first 3-minute triage, a 3 to 6 hour verification checklist, a 24-hour response timeline, and 5 defensive plus 5 offensive memo templates. We will use the 2025 CDI updates and recent succession communications as real examples for why short filings now move markets more than ever. Start with the rule change. The SEC's the 27th of January 2025 CDI updates clarified several points. Voluntary PX14A6G submissions are permissible even for smaller holders if the filer discloses ownership, cover page, and Rule 14A103. Data must precede the soliciting material, and filings should reflect prior distribution to holders. Crucially, the staff reminded everyone that Rule 14A9 still applies no materially false or misleading statements. That clarity made PX14A6G a feature, not a bug. Once an outsider's memo is on EDGAR, it becomes searchable and citable and visible to algorithms and traders at the same time as company filings. Combine that with social amplification and trading desk distribution, and you get intraday narrative moves. Quick question. How many times could a 2-paragraph memo appear in headlines and feeds before IR can respond? The real answer is often before the first cup of coffee is finished. Here is the tempo. IR teams should adopt a strict 24-hour cycle, immediate triage in the first 3 minutes, rapid verification over the next 3 to 6 hours, and a public and legal response within 24 hours. Why 3 minutes? Because the first read determines whether you escalate, and delays equal narrative loss. Read this aloud at first sighting. First, who filed it? Check the PX14A6G cover for identity, claimed ownership, and timestamp. Second, what are the headline claims? List the 3 most damaging assertions. Third, reach. Is it on EDGAR only or already viral across social channels and outlets? Fourth, market signal. Check volume and option activity for immediate price impact. Fifth, assign roles: IR lead, legal, market operations, and executive approver. This script is short on purpose. You need roles assigned immediately. If the PX14A6G filing lacks a cover page or claims it was not distributed to holders, you might have a regulatory angle. Keep that thought. It matters later. Now for verification. This is the forensic part, and it must be evidence-based. The verification checklist is what you hand counsel and the board. Confirm the filer's legal name, entity structure, and beneficial ownership using Form 13D or 13G and other filings. Determine whether the filing falsely claims ownership stakes or institutional support. Validate any claim that the memo was previously distributed to registered holders by checking email headers, mail logs, or broker-dealer routing. For every damaging assertion, find a primary source or refutation by pulling timestamps, board minutes, financial statements, SEC filings, and analyst notes capture time series price, volume, and option spikes at the filing timestamp and screenshot market data to demonstrate causation. Identify potential legal flags, such as possible Rule 14A9 misstatements, omitted material facts, or non-compliance with cover page rules. Finally, map amplification by listing where the memo spread across social platforms, wire services, and sell-side notes. If the filer didn't distribute the memo before filing, that can be challengeable with the staff, but you need clear evidence, and time is short. If verification shows false or misleading claims or significant market impact, you need fast, compliant responses. Here are 5 defensive memo approaches that are short, punchy, and suitable for a PX14A6G counterfiling or a press release. The immediate factual correction should have a headline noting the company is correcting a material inaccuracy, then 2 sentences summarizing the false claim, 2 bullets with documentary evidence contradicting the claim such as SEC pages and timestamps, and a closing line with an IR contact. The clarifying context memo should offer 1 paragraph explaining the correct context and a 1-line corrective chart or key metric plus 1 paragraph on next steps and governance process. The market impact notification is aimed at exchanges or regulators and should briefly state the price and volume anomaly, attach the time series data, and request a trading review. The holder outreach summary is a short note to major holders summarizing the claim, stating 2 lines of corrective evidence, and asking for coordination and a conference call. The PX14A6G counterfiling is a company-authorized short letter that corrects facts, cites legal basis for challenge, such as lack of prior distribution, and instructs holders to rely on the company's full proxy materials. These responses should be equally focused and concise. Sometimes the right move is preemption or amplified support. Here are 5 offensive memo approaches to shape the narrative and close the information asymmetry fast. The preemptive strategy note reaffirms the strategic plan and key metrics in a short executive summary, includes a 1-page snapshot chart, and invites holders to review the investor deck. The supporter endorsement is a third-party letter from a recognized holder or industry expert, endorsing management and explaining alignment of incentives. The data snapshot is a quick fact sheet titled 5 Things Every Holder Should Know Right Now, listing verified metrics, governance facts, upcoming catalysts, and proxy dates. The comparative valuation rebuttal sets the valuation record straight, with a short comparative summary of peer comps and a concluding line about long-term value. The PX14A6G supporter counterfiling is a notice of exempt solicitation from a supportive holder, clarifying why the outsider memo is misleading and attaching supportive exhibits. Always spot-check offensive memos for Rule 14A9 compliance. Offensive doesn't mean reckless. You will not escalate every memo. Use a simple scoring rubric to decide. Rate credibility of the filer, distribution reach, claim severity, legal risk under Rule 14A9, and market impact on a 0 to 10 scale each. If the total score is above 30, escalate immediately to counsel and market operations. If the total is between 20 and 30, prepare a rebuttal. If it is below 20, monitor. Call counsel for any potential material misstatement, suggested proxy solicitation, or claim that could influence voting. Call the exchange or FINRA for evidence of abnormal trading or coordinated activity tied to the filing timestamp. Call the SEC staff if the filer breached cover page or prior distribution requirements, and you seek staff guidance on corrective measures. Real examples show how a brief, authoritative statement from a known figure compresses reaction time and moves market expectations. Short, recognizable voices and well-crafted memos get outsized attention. You cannot react if you do not detect. Set up automated alerts for real-time EDGAR PX14A6G filings, social media spikes on key terms, sudden options and volume spikes on your ticker, and broker-dealer desk chatter by establishing contacts at broker desks. Create a standing a 6G rapid response team with an IR lead, legal, market operations, an executive approver, and an analyst. Rehearse the 24-hour SLA quarterly and document every incident for potential regulatory follow-up. Quick recap. Voluntary PX14A6G filings are now a fast, indexed way for outsiders to publish short investor memos that can move price and proxy narratives. Your 24-hour playbook is a 3-minute triage, a 3 to 6 hour verification, and a 24-hour response window